Hey, good morning, everybody. Let's go ahead and get started. This is Trini John from Simpler Trading. We're going to go over this week's broad market analysis. Today is the 11th of February, 2024. Got up about 4:30 a.m. this morning, got a cup of coffee, and started to look at charts, and here I am. So that was about 5 hours ago. So yes, a lot can happen in 5 hours. We did charts. I had a phone call with Melissa. We talked strategy. We talked about the market and all these really good things. And really, what I want to do is just make sure before we get started here, please understand this is all about supply and demand for me. So, a lot of times, what we're doing is identifying these zones. I'm telling you about the little things that come out in the market, like Market Watch here. We'll talk about earnings. And all of these are just a catalyst that pushes price into the zones that we identify. Or many of you have trendy indicators such as the trendy edges that already identify that playing field for you. Let's go ahead and get started for this week. So this week starts off with, I guess a bang. The earnings look great too. Monday, February the 12th, monthly US federal budget. Tuesday, February the 13th, consumer price index, so the CPI is a big deal. We'll be looking forward to that at 8:30. And then looking over here on Wednesday, we have nothing scheduled. And then on Thursday, we have initial jobless claims, US retails. Moving on down here on Friday, we have core PPI and then consumer sentiment coming out at 10 o'clock. These are Eastern time, so please make note of that. Again, this is news that you should be aware of or catalysts that you should be aware of that could cause a little bit of volatility in the market. Moving on down here, we'll look at earning whispers. Let's go ahead and take a look. I'm going to zoom in just a tad. And you guys can see here, we have a pretty packed week this week as well. Some of my favorite names I went ahead and underlined. We have Shopify, Airbnb, Datadog, Upstart, Lyft, all coming in on Tuesday. On Wednesday, it's pretty quiet for me, anyways. Twilio, Cisco, Fastly. Other than that, Upwork. And then on Thursday, some great names. We have Crocs, DraftKings, John Deere, Coinbase, Roku, Yeti, The Trade Desk, Toast. All of those are pretty hot names that I'm interested in for sure. And then Fridays looks, pretty boring. Moving on, let's get into last week's neutral results. We'll take a look at that. Let's go ahead and view. As you guys can see, the lower levels held very well. We did get a trigger long over the top of these green zones. We did push into the upper targets up here towards 502 and then on the QQQ 436. Moving on down, we have our new SPY QQQ neutral, and I'm actually going to bring that. I'm going to bring Thinkorswim so you guys can see the levels just a little bit better. There we go. These should be nice and clear for you. These are our levels going into this week. So notice here I have outlined the demand zones. We are in a really strong uptrend, as you all know, but I wanted to identify an area where I believe if the market were to come back and give us kind of a breather where we could look to be looking to re-engage on the long side. Now, very important, I'm using a 4 hour on these charts, and the 4 hour we'll talk about a little bit later. We can use anywhere from honestly a 30-minute to a 4 hour to be on top of whether or not there is a trend change coming in the market. Instead of us trying to predict exactly when it's going to happen, let's just look for clues that are showing up on the smaller time frames. The high time frames look extended, the mid time frames look great, the clouds are working, but it's not until these prices start to basically close underneath the cloud that I start to raise an eyebrow or really feel like, hey, this could be a turn in the cycle to the downside. So again, notice these clouds are working very well. Every time we come back to them, it's a great place to find our entries to the long side. So these are just EMAs. This is the 9 EMA on top here. Okay. Again, this is where you'd freeze. Go ahead and put these levels on your chart. And if you want to learn how to trade the neutral strategy, I have a quick, easy tutorial video on YouTube to kind of help you with that. If you have any questions, please reach out to me. All right, so let's move back here. Let's get back into our charts. Now we're going to go into Trading View, and I'm going to go over the quarterly charts with you. These are really important, especially for traders who don't have a lot of time. to sit in front of their charts, right? So we're going to come over here, we're going to look right here and notice this is the SPY on a quarterly. So our notes for this week, 2/11/24. The continuation continues with 1 month and 18 days left. We have a long time until this quarter closes out. I'm going to now use the first extension target as near term support, which is 496, and mid support is 480 by 466, and your long term support is 444. Now I'm going to go over that with you guys so you can see it and just kind of show you what I'm using here on these charts. So once again, this was an extension target that we were looking for a couple weeks ago. We hit that, we now got above it. And what I like to do is what was resistance becomes support. That is the idea here. So all I'm saying is short term, this 496, this red level right here is going to be that support. And then our mid comes in. All I'm doing is if I click here, you'll notice where, and I'm going to freeze the screen. This is where I have my anchors for my Fibonacci. So basically measuring from here to here. I'm taking into account the 23 and the 38.2. That's going to be your mid support. Then long-term support, I'm taking into consideration the demand zone. You guys can see the inside and up formation. And it is also confluent with the 618, which is 444, which is my favorite number. And I feel like this is some kind of, you know, intuition, if you will, or some kind of foresight. I could see this being a number this year, a very big number. Whether we continue to move up and then we have some kind of big drawdown, this will definitely be a number where I'll be interested in going longer if it happens. If it happens. That sounds funny. I mean, it's February. I would think that we get back down to that number somehow, sometime this year, but I could be completely wrong. All right. Anyways, that's what we got on the SPY. Looking very bullish. We know that. We don't need to keep talking about that. QQQ, same thing, quarterly here. Let's go ahead and read the notes. The continuation continues. 1 month and 18 days before the candle closes. Near term support is 432 by 422. Mid support 415 by 400. And long term 378. And your targets are 440 by 447. Again, what I'm saying relates to the quarterly, and I'm giving you weekly updates. So the big picture, okay, is that this does not close for another month and 18 days. Anything can happen from here. It's a if this, then that on that SPY and the QQQ. So once again, when we look for our near term support 432 by 422, all I'm doing are the extended levels that we had before, and now that we are above them, I'm using this little pocket here for that support. Our mid support comes in at 415 by 400. Just like the SPY, I'm using the 23 and 38.2 of the overall range that I have measured. And the same thing, if we click on here, you'll see that the anchor points are from here to the pivot high. Now, my long-term support is going to be 378. All right, and that's going to be all the way down here towards the 618, but also the inside and up formation where we have nice confluence. Just like the 444 level is a big deal to me on the SPY, your big deal, or for me, is going to be down here towards that 378 level. Overall, everything looks really nice, and as you all know, if we were to look at this entire chart here, we would see that the quarterly is a lovely chart. I mean, I just get super excited when I see this thing because at the end of the day, all of us traders, we stress ourselves out, right? We spend a lot of time being concerned about the little things, and it's the big chart that just keeps performing over and over and over and over every time we come into this cloud. So if I get an excuse to buy at the cloud, sure enough, I'll be buying. And once again, not only is the cloud now confluent with this inside and out formation, it is also confluent with the 618. It's confluent with the long term. And again, that's why that 378 number is such a big deal. And again, 444, such a big deal over there on the SPY. Okay. Moving on down, we're going to take a look at the dollar. Remember, folks, I mean, the easiest way that I could tell you this without, sounding crazy is that when the dollar is pushing to the upside, we're looking for the market to kind of cool down. When the dollar is pushing to the downside, we're looking for the market to continue its nice little rally up. Once again, we created and found a supply zone many moons ago. We were right. Price hit here. It dropped in October. We got bullish. Things looked great. The market ripped to the upside. Then the dollar came into demand, and then we started to be a little bit more cautious down here. But during that time, we coached through this very, very well. We understand that the dollar could bounce from here and we could see a little bit of a drawback in the market. Now, to be very honest with you, the market's more bullish than a lot of people have seen in a very long time. So it's very easy to sit here and say that the market's easy, but again, it reminds me of 2021 where the bullishness just didn't stop and there were a lot of things saying, "Hey, be cautious." And if you were cautious, you felt like you missed out and you felt like there was a lot of FOMO, right? And you probably felt that as well. And I feel that right now, to be very, very transparent with you. I don't think that the market's easy up here. I think that it's easy to talk yourself into thinking that you're buying right at the top. But this dollar is saying, listen, it pushed up like you wanted it to. We got a couple days down, then we got a couple days down, but it continues overall on the weekly to be extremely bullish. We came up and hit the 618, and I've coached on this the last several weeks and said, listen, unless the dollar can get above there and sustain above there, then then I start to really become cautious. Well, we can't do that. This is exactly what's supposed to happen. Price hit the 618, then it pulled back. All right, that's exactly what we want to see. All right. Now, if the dollar starts to break down even more and gets back below this 103 level, then the market continues to the upside. We're basically in a holding pattern. And if you notice, like the big trend continues to hold in the market with slight pullbacks, and that makes sense to me because the DXY or the dollar is not bidding above that 104.61. It's just holding here. And so overall, retail continues to buy up the market here. All right. Let's go ahead and move on in the TNX. We'll take a look there. This is going to be your 10-year treasury. Again, TNX. And to make this quick and easy, I've said for the first quarter this year, I expect the TNX to bid and go ask here. These are the levels that I'm expecting into the first quarter. So again, we still have a month, and so far this has been working out since we started this. These two zones, these two opposing zones this year. All right, so not too much to really talk about. I would be a little cautious this week if we start to bid above that 4.238. Moving on down, we're going to take a look at the SKEW. It's coming in this week at 156. Last week was pretty high. It was up in the 160s. I'll try not to talk too much on this because I feel like, I go into it every week just to remind everybody that basically same thing that was happening here in 2021 is happening here, all right, in 2024. And that is instead of getting extreme readings like we're used to, we're staying up towards the top of the curve where most people would be really cautious, kind of walking on eggshells up here and just waiting for the market to pull back. I identified two major levels that I believe are the most important until these break, and it's a little bit different. When the SKEW comes down into the 132 area, it's time to really buy. It was in the past that when we were coming into these levels where the market was extremely fearful, and when they're extremely fearful and the ES and the NASDAQ and the Dow and the RTY are coming into demand, I want to be buying long term. This year, completely different. October since then, we've just been, and actually it's more than October. We've been sitting up here since June of 2023, and we've been fluctuating between these two levels. Now, this reading is very high, just like it was last week. We got a little bit of a pullback and then off to do all-time highs again. Okay. So if we were to get some kind of SKEW drop where this happens, then again, I want to be looking here to buy until I'm wrong. So again, this is data looking back all the way to June. This is the time to be buying in the market. And up here where we are right now is the time to be cautious. Now, I'm not saying cautious as in like don't take any calls or any long positions next week. Just understand this is where I want to be looking at my shopping cart, my portfolio, and just understanding that anything can happen while we're sitting up here. So please be aware of that. Let's go ahead and move on into the fear and greed index. And as you guys can see, we did make it to the extreme greed. And I'm a little greedy. I'd love to see this thing pegged at 100, wouldn't you? That'd be kind of neat. Let's see how fast we can get this bad boy going, right? There's still there's still a lot of room to move to extreme greed, so just understand that. This is 78 and this is 100. So if you don't think it can get worse, it can. All right. Now, again, we're fluctuating between greed and extreme greed. So just understand anything can happen from there. Okay. All right, moving on down. This is where it gets good for me because I love reading off my ES futures chart to trade either the SPY or the SPX. And by the way, did we not have some amazing SPX trades last week? We really did. I was able to peg like three trades that were just absolutely perfect. I love that. I feel like, I'm really in tune with the SPX and the ES futures and all that good stuff. And I love teaching you all of this. Now, what we'll be looking at using the ES futures is the weekly, then the daily, then the 4 hour, and then every day and night, I'm going to give you an updated blueprint that allows you to be able to understand how to intraday trade this. Now, you may not think the futures are important to you, but they really do dictate how the market's going to move. So this is, in my opinion, the most important part of this broad market analysis when I come in here. So ES futures on the weekly. All right. Again, 1, 2, 3, 4, 5 consecutive weeks up after 1 week down. Now, the normal, all right, the normal is typically like, 3 days. So once again, we're extended here. And if you look at it as a whole since October, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 14 weeks up, 1 week it digested. And it really didn't even, I wouldn't even call that digestion. It's like it just used the bathroom real quick and got right back up, right? So here we are, and on the second wave up, for me, I feel like once again we're extended. However, all I'm doing here is identifying the support by using Fibonacci's. Now, if I were to break this chart down on a lower time frame, and I'll show you that here in a minute, inside the support area is also the formations that we're looking for buyers to step in. What I love about the support here, even if we were to get a big pullback, and I say big, that's 49.30 to 48.40, so anywhere from 100 to 200 points to the downside would be, an eye opener to anyone that FOMOs into a hypothetical top, right? Because we don't know if this is a top yet, but let's just say there's a top created. That would be a really big setback. Okay. Now, that support is awesome because it's in line with Fibonacci, it's in line with structure, it's in line with the 9 EMA, and all of those things really mean a lot when it comes to confluence. Okay. Extension targets to the upside, I could see 50.71 all the way to 52.30 this week if things continue to be bullish. Okay. Moving on, let's look at the daily. So the daily hit perfectly on the short trigger on Friday. All I did was replace this red line was here, okay, last week. I replaced it with a resistance, and now we have a new short trigger to the upside. Once again, when we get to triggers, I want you to look at smaller time frames for what we teach in order to get short. All right. So just because we get there doesn't mean we necessarily go short. To the downside, your buy triggers, I left one of the buy triggers where it was, and then I pulled the other one up that comes and is confluent with the trendy edge, the previous trendy edge, the inside enough formation, and the 9 EMA. So this area could be looked at as an entire demand or a buy zone. But please understand, once again, when price gets there, you guys know what to do. Okay. We'll be looking for our signals and so forth on smaller time frames. Going over to the 4 hour, this chart continues to be super important. Like I said, during this entire journey from October to now, I've been plotting our support, our imbalances, and so forth. Okay, and I showed you these last week. I'm not going to go and show you all of them. If you want to, you can go to last week's video. But these are the levels that continue to keep working. All right, so we do have a new one, and I went ahead and put that on here, and that starts at 49.83. And on a 4 hour, if we zoom in here, you can see that this level has been tested by this wick, and I went ahead and shown you by showing you the arrow here. This area, what it means is when it's been tested, that it can easily break down if we do come back to there. So just be cautious. The bigger imbalance, if you will, happened back here. And you can tell by just looking at the candles there. Okay. These are really important, as I was saying before, anywhere from 30 minutes to 4 hours. I'm not, again, I really want to stress this. I feel like when I look back the last several years that I've been teaching, that I'm always extremely bullish. And nothing has really changed here except that I look in the mirror and think to myself, wow, John, you really asked for it this time, didn't you? Like you're super bullish, but you're also super cautious right now. And this is like a really hard emotion to deal with as a trader. I just know that every time that price comes down this cloud, I want to be looking to buy. It's not until prices start to close underneath this cloud that I start to feel a little like weary and a little cautious. And again, you don't have to use a 4 hour. If you wanted to come over, say, to a 30-minute, what this does is when we reduce the time frame, it gives it a shorter period to get, I guess, on the right side of the trade. We still use the same information. Everything I teach is fractal, meaning you can use it on any time frame. But the idea is that if these prices start to close underneath this cloud, I want to be cautious, right? And each time I do that, the cloud gets smaller and smaller. So this would be the smallest time frame that I want to use that analogy on, okay? So again, 30 minutes. Notice as we go up here, if I go from a 30, let's say, to a 2 hour, this is what the 2 hour looks like. It's a little bit more extended. Okay. So it might be not everybody wants to sit here on a 4 hour and say, hey, John, like yeah, I see what you're saying, but if I'm long here, I don't want to be long all the way to 49.77, right? That's an extra or additional 60, 70 points. I'd rather be short a long time before that. So again, for me, I want to be looking at a 30 all the way to a 4 hour. If you really are looking for something a little bit more intraday, that's when we use our intraday charts and use what's called the PMZ or the pre-market zone. Okay, so please just understand each one of these are important for the trader who is using this time frame. All right. So overall, my overall sentiment, I stay extremely bullish. I understand where I want to buy, but I also am looking for little clues to let me know, hey, pump the brakes. Okay. We still have a lot of earnings out there. We still have the behemoth, NVIDIA out there that still needs to report in a couple weeks. We have a lot of great names that can still push the market to the upside. And don't forget, we got the RTY or the IWM that's starting to look really good here. And if this little guy finally starts to catch up with the market, what do you think happens there? Right? A lot of synergy is coming into the market. So blow off top, I don't know. But all I know is just continue to follow the trend. Okay. From a day to day basis. It's really fun. So, anyways, there's the ES futures. Let's go ahead and look at the NASDAQ. We'll take a look at the NASDAQ. And same thing, we're going to come over here to the weekly. This is what it looks like. My support for right now, same thing, is going to be near support 17,838. If we get a pullback into the 17,237 by 16,473, this is where I would expect buyers to come in. Over here on the daily, here is your resistance level, which basically I'm just taking the top there. Short trigger at or around 18,355. Far as the buy trigger, they're a little bit lower than I would normally put them. And just in case you would want to see a different or another buy trigger, I would actually use this inside and up formation. It could easily come back into here and find bids around 17,892 by 80, somewhere in there. But I want to just keep two on here and I want it lower because the NASDAQ tends to lead. And when it leads to the downside, it's pretty dramatic. So these are, a little bit lower than normal, especially this one down here at 17,400. But again, I just want to be careful. I've been here a lot and I understand that when the market does turn, I don't want to have, I don't want to continue to be extremely bullish on my triggers and, for example, have like only this and this here, and then all of a sudden you get, this type of move, and you're like, well, I tried here and I tried here and I tried here. I want a little bit more of a deviation from current price. Okay. Moving on into the 4 hour, same thing. When we come across here, there's a lot of different levels that we can use. You guys can take this and you can place this right here at your inside and out formation. This is a really nice little powerful area in here as well on the NASDAQ. We also have, you could take this and move another one right in here. It's been back tested already. You could tell that by this candle here. All right. So because price has already come into there, just know that it's kind of like what I was showing you before, that if price comes back to here, it could break down and head lower into these levels. Now you'll notice on my charts, I don't usually do this during the BMA. We have the different color lines. Basically, all those is they are identifying all these zones that I find, and those zones are color coded. So basically, each color coded line is a demand or supply zone on different time frames. This really like takes out the time for me so that I don't have to create these zones everywhere. But again, I teach it, I have videos on it. You're more than welcome to watch those. But again, indicators are for convenience, and that's why they're on my charts here. Okay. So that's what we have overall this week. I'm really looking forward to this week again with you guys. I'm really pumped up about Tesla. I'll be doing a video about that here shortly. And here at Simpler, I believe I have the Monday video, so I'll be sending out some ideas out either tonight or tomorrow for those Monday videos. If you guys have any requests or something you'd like to see, please let me know. Don't forget to give us a like and subscribe. And once again, can't wait to trade with you this week. Have a good one.